Some of the country's top business leaders have just wrapped up a meeting with President Obama over at the White House, focusing in on the fiscal cliff.
Among those taking part, the CEOs of Home Depot, Coca-Cola, Macy's, Yahoo, AT&T, Goldman Sachs, and more than a half dozen other companies.
Lloyd Blankfein was there representing Goldman Sachs, the company he heads. He's joining us now from the White House. Lloyd, thanks very much for joining us. You were there. You met with the president. You were on Capitol Hill today. Where do you stand on this issue, a sensitive issue of raising taxes for families making more than $250,000 a year?
Wolf, we have to have a solution to this budget crisis. It's going to take more revenue, and it's going to take cuts in entitlements. And I think if people as soon as people leave their ideological perch and realize that we have to have a reasonable compromise, I think the better it is for everybody.
So does that mean you would support the president when he says go ahead and increase that highest marginal tax rate from 35% to 39.6%, where it was during the Clinton administration for incomes above $250,000 a year?
I think if that's what it took to make the math work, when you looked at the entitlement side and when you looked at the revenue side, I wouldn't preclude that. Of course, we would have to do that if the numbers drive that way. That's not an extreme point of view. I wouldn't be in cement about that at all.
From what I know, that's a stronger position that you've taken than in the past. What changed your view here?
Well, it's consistent with the positions I've taken in the past. I said that there has to be balance. It has to be responsible, and I think both sides have to yield. At the end of the day, it's a divided country, but we have to govern the whole country, and people have to throw in. It's not a winner-take-all in this, because we don't want to careen off one wall and then go off the other wall when the administration changes or every 2-year congressional cycle. So I think there has to be a compromise. Now, I've said in the past that the numbers will drive you to more revenue. And again, I'm not ideological. I would prefer, and I think it's better, to have as low a marginal rate as possible, because that's the incentive is the marginal rate. But if we had to lift up the marginal rate, I would do that.
What about the Republican argument, though? If you raise taxes on anyone during a time of economic distress, it's only going to hurt economic growth?
I think that's true. And I think it's also going to hurt the economy as a whole if we have a widening budget deficit that gets harder and harder to finance, because the credibility and the credit of the United States is at risk. I think these are all bad alternatives. Look, if this were easy, we wouldn't be standing here having confabs at the White House about how to achieve it. It's going to be difficult. I think what we try to do is we try to get in as good a place as we possibly can. I'd rather have more of the taxes deferred to beyond a period where the economy is weak. I would rather have the pain of release expenditures also rolled forward, maybe changing means testing and maybe raising entitlement dates, and have that kick in at some future time. But also there's other values that are at stake here, namely trying to get those lines to start to converge so that the budget the budget deficit isn't permanently expanding.
Now, if Republicans do get to a point where they would agree on raising those tax rates on wealthier Americans, that's a major move. I mean, I was on the Hill today. Mr. Blankfein and the Republican leaders made clear they're not going for that. They're not going for that, at least right now. If Republicans would do that, it takes two to tango. Politics, even though you're not an ideologue. Where do Democrats specifically, do you think, need to give then?
I don't speak for the Democrats or Republicans. Listen, I'm not a member of the Democratic leadership or a member of the Republican leadership.
But they're seeking your advice.
Well, I'll give you my advice. I'm a citizen of the United States. The success of my business and the success of me and my family personally correlate with the success of the United States. I'd like to see us be a successful country. Mm-hmm. I'd like not to have a crisis which will wreck the economy and derail the recovery. And I would like the upside of tapping into all the energy that's starting to well up in this country that really favors the competitiveness of the United States, like all the money that's on the sideline, like we've finally chewed through a lot of the problems that we've had over the last several years, like the great energy situation that's available in the United States. I think we're at the I wouldn't talk so much, we only talk about the fiscal cliff. How about being on the precipice of great advantages for the United States. And I'd like to take advantage of that. That's my personal interest. That's my business interest.
And from your business interest, I think from investors across the board, everyone who invests has money in 401ks. What would happen if the country goes over this so-called fiscal cliff, and let's say in February or March there's still no deal, and then all of a sudden you got to deal with raising that debt ceiling once again? Where does America's credit worthiness, the rating, stand?
Well, I don't know exactly what will happen, but I know it will be bad. Again, the United States has great credit. The United States still borrows cheaply, but at some point there'll be competitors to the United States for that. And by the way, even if there weren't, you need the United States and the leadership in the United States to help drive the global economy. Listen, at the end of the day, I don't want to quibble. You quibble about the tax rate, but the more important thing is to increase the size of the wealth pie. And the idea of keeping rates low, and then you pay a low marginal rate of a shrinking pie because the economy is impaired, I think that's crazy. I'd rather get the country on the proper footing as the most important objective.
Now, you say
But
that you are just
Let me also say,
okay.
Can I just add?
Sure. Of course, go ahead.
But entitlements are also important here. I just came from Europe, and I have a lot of confidence. Last week I was in Europe. I have a lot of confidence they'll work through their problems. But I'll tell you, it's a lot easier not to get to that place in the first place than to try to solve the problems of pulling back on entitlements. The problems in Europe is that entitlements vastly exceeded the scale of their ability to generate the revenue.
Lloyd Blankfein coming out of a meeting with the president. Thank you so much for your time this evening.
Thank you.